we'll get started.
And you got the Facebook going too?
I wasn't able to. It's
Oh.
asking for the code to my email, and I'm not going to do that right now.
Right.
So thank you guys. Thank you for taking time out of your busy day to join us here at Blue Water Credit. Today, we're going to be talking about boosting buyer potential credit repair strategies for real estate agents and loan officers. Thank you guys for joining us. I know the market right now is tough. Today, we hope to bring you guys some solutions. We're going to talk about new services on how we can increase your client's credit and get them compensated. This is really crazy strategy. They don't pay $1 and they get paid compensation, as well as items are deleted, scores are going up. Sarah's going to talk about the Vantage score versus the FICO score. For those of you that like boxing, we have a little boxing analogy there. We're going to give you a 2023-24 credit update. We're going to go over how to increase a credit score by 50 points in 30 days. And you guys know in this market, every opportunity to improve a credit score, to lower an interest rate is going to be crucial. We're also going to give you guys the biggest mistakes we're seeing clients make on their credit so that you can coach them while they're trying to buy a house, not to make these mistakes. And then we're going to give you a lot of ideas that you guys can use on social media for marketing. So this will be recorded and you guys can use this. We plan on sending out this recording to you guys next week along with the slides. So thanks for taking time to join us today. So let's get this party started. So 4 services that we offer now. So credit repair is our main service, the removal of negative items from our credit report. As you guys know, we've been doing that for over 15 years. We've helped over 14,000 people improve their credit. Debt negotiation. So if you have a client that has a collection needing settlement, or if you have somebody that is in kind of a pinch, they've got some collections. Sarah will talk about that in a second, how we can negotiate account for deletion so scores can go up. Third, this is a new service. We have consumer advocacy where we work with the client. We have an attorney that can get the client compensated based on some errors. Jer's going to talk about that in just a moment. And then something that we've just added because we've seen a huge increase in debt. So if a client can't do it like a cash out refinance with you, we want to present some debt management solutions for you guys. So if you have people with high credit card debt, repossessions, things like that, we want to prevent a solution for them. So we'll be going over that in just a moment as well. So this year alone, we've already seen over 5,000 accounts removed from credit. I don't know how many points that's translated to, but thousands and thousands of points increased in credit scores. We've had over $165,000 paid out in compensation to our clients, whether it's cash or debt waiver. And we'll talk more about that in just a moment. Jerry, you want to talk us through how credit report errors and phone call harassment, we've been able to get accounts deleted and also cash compensation to our clients.
Yeah, absolutely. Thank you, Jeff. So as I mentioned, my name is Jer. I'm a case manager here at Blue Water Credit. There's 2 main objectives in my role. Number 1 is client experience, and number 2 is repairs and deletions of negative accounts. So this is where we work with our credit attorneys to get these negative accounts and repaired or deleted. There's 3 components that our credit attorneys can focus on. The number 1 is identity theft. So if your client is experiencing any sort of fraud accounts, we would look to get those items removed. If the creditor or the credit bureaus fail to remove the fraudulent accounts, this is where we turn it over to our credit attorneys to go ahead and file suit against the creditors and the credit bureaus. This process on average takes about 35 to 120 days to be completed. Compensation is up to $30,000 paid to the client. And our credit attorney fees, this applies to all 3 components here, but attorney fees are paid by the defendant, which is the creditor. So it's never coming out of pocket for the client. The next component that our credit attorneys can work on is phone call violations in the last 12 months. And this is strictly on credit cards that have 60-day late payments or more in the last 12 months. I just named a few here. These are probably the most popular that we see on credit on a day-to-day basis. These credit card companies are going to be Merrick Bank, First Premier, Synchrony, Credit One Bank. This particular component of phone call violations is restricted in certain states versus identity theft, or the third component, which we'll get to here in a second. It's not restricted by any state limitations. So the final component here, credit reporting errors. If there's any errors that are involved, whether that's a deferment that was in place, but the creditor still charged late payments, or those fraudulent transactions involved, the client was never late. These are things that we would look to try to get repaired and deleted as well. Similar to the ID theft component, should it not be deleted, if the creditor or the credit bureaus fail to delete it, we'll turn it over to our credit attorneys. They'll go ahead and pursue a claim. And again, the attorney fees are paid by the defendant and never by the client. Compensation for this particular component is upwards of $1,000, just depending on the damages that took place. And this sees an average timeline of 35 to 90 days to be completed.
Cool. And then, Drew, many times we're seeing these accounts deleted as well. So clients are getting cash compensation or debt waived, as well as credit scores are being improved, right?
Yeah, there's two important things I did want to mention too. Is compensation is only granted to clients working with a credit attorney. So if your client does credit repair on their own or with a company that doesn't have a credit attorney, the compensation doesn't apply. And then again, the credit attorney fees are paid by the creditor, not by the client.
Awesome. And Drew, I got to give you a plug, buddy. Tell us about the testimonial you had yesterday. I mean, when I heard this, I was like blown away. So give us the good news.
Yeah, I have it here right in front of me, and I'm going to read it to you guys word for word. So I got this yesterday from a loan officer. I've been working with our client for 3 months now. This is what the loan officer had emailed me yesterday. "You are a miracle worker. How in the heck did you do that so fast? She will be extremely happy with your service, and now I can move forward with her loan application. Thanks a million." So if that's something that you guys, want to get the same experience for your clients, like I said, my number one priority for your client is client experience. So if you have clients that need help, I'm going to drop my email in the chat here. Feel free to send me an email for any of your clients.
Awesome. And then for those of you on the call, if you have any questions, Jur and Kara will be monitoring the chat. Just type your questions in the chat. We'll get them answered as soon as we can. And so we'll go ahead and go on to the next slide. So our competitive advantage. Sarah, I'm going to turn it over to you for this part.
Yep, thank you. So we know that there are a lot of people that you guys could choose to work out there. And we'll actually have a slide about actually how many people claim to be credit repair companies or specialists or gurus on social media. But so I wanted to kind of just highlight the things that Blue Water Credit does different. First and foremost, we are saving you and your clients time. We're working all 3 bureaus and all negative accounts each month. There's a lot of places out there that like to prolong a program and pick and choose what items they're working each month or what bureau they're working on. And that is not our model. We're all about getting the clients in and out back to you as quickly as possible. Average length of our program is 14 compared to the industry average of 13. Other thing is we are going to have credit experts like Jur working with your clients while they're working on disputes on ways that they can maximize their credit by things that they can do on their own. Also, we're never going to recommend paying or settling something that we don't think is going to be beneficial. We want to try to keep as much money in their pocket as possible because we know they're going to need that for hopefully closing on that home you're getting them. Next, we make it easy. We don't have a call center experience. I know that's frustrating when I ever have to call to a call center and I can't talk to the same person. Your client is going to get 1, maybe 2 people as a point of contact. If they do debt settlement, they'll have myself along with someone like Jur that they will be in contact with. That will also be someone that you can get updates from. You and the client have online portal access to the progress that they're making in the program. And last, but definitely super important out there, Jeff's going to cover a little bit more onto, we are compliant. We know that when you send your clients over to us, that's your name on it. That's your reputation. So we want to let you guys know that we are licensed with the DOJ. We are bonded. We adhere to all the rules out there. We are not specifying any specific results. We cannot guarantee anything. We can give you averages. So if anybody's out there telling you we can get everything off or I can get this off 100%, can't do that. We do not collect any fees for services we have not performed. So we need to provide a service to your client in order to collect any money. And we're actually a forefront of credit repair companies. We are actually now setting up escrow accounts for our out-of-state clients to make sure we're staying on top of being compliant. So it's really exciting to be on the forefront of this.
Yeah, you guys be aware. I found this out last month and I was really blown away. There's 42,000 credit repair companies nationally. There are only 63 companies that are registered to do business in California. So you can go to the Attorney General's website in California. It's under Credit Service Organization. If you guys want to find out who's compliant for our state, you just have to type in their name. It's a short list, guys. There's only 63 companies out of 42,000 credit repair companies in the United States. So it's very, very likely if someone contacts you from another credit repair business, they're not legal, they're not operating within the guidelines. Just like in real estate, there's federal guidelines and there's state guidelines, and we're on the forefront of leading compliant and ethical credit repair. So you guys, please make sure if you are working with someone else, just find out if they're compliant. Make sure, because a referral to them is probably not going to yield a good experience, especially if they're, we have all kinds of cases that I'm coming across now. I'm part of a board that we're leading the charge of compliancy. And so there's a lot of unscrupulous companies out there. So just be aware. That's my main message to you.
All right. Thank you, Jeff. So before I kind of get into the meats and potatoes of, some credit tips and hopefully leaving you guys better credit experts, I wanted to kind of go over the main points of why you would want to work, first of all, with a credit repair company. And we hope that that is us after explaining, how compliant we are. So I'd like to touch on a couple of points here is enhanced client services. So we are providing an extra layer of value to your clients. We are providing comprehensive credit solutions. If they are not a good fit for credit repair, we have someone that we can refer them to that is hopefully going to be able to help them. If they do enroll in our program, they're going to get a personalized credit plan. It's not going to be just these cookie cutter letters that are sent out for everybody. It is personalized to that person's credit situation. And next, we're hoping to increase your deals, closings. We know when you have a higher score, it's going to result in a higher chance of a loan approval and hopefully less delays. And with the way this market, how volatile it is, we know time is of the essence. We're hoping to give you an extra greater pool of people to work with. Those people that have been told no, your credit score isn't high enough and nobody wants to waste the time on them. When you sit there and you help those people, I guarantee they are going to be the most appreciative client you will ever have. They'll probably be a client for life. And I guarantee they're going to go the extra mile to make sure they tell all their friends because you're the one who took the time to get them in the home. So hopefully, leads to a lot of referral and repeat business with that client. And lastly, credit education, kind of what we're doing here today. We offer a lot of credit education services to you and your clients. We have a deep understanding of what's going on in the credit world. That is our job, to stay on the forefront of anything that's changing, credit conditions, anything that we can make you guys aware of so you can let your clients know what's coming on the horizon. And lastly, providing you with content for your social media, podcasts, blog material. We know getting in front of people on social media is huge nowadays. So we want to make it easy for you. Credit is always a huge topic that, gets a lot of interest from people. So we are more than happy to send you out information that you can convert into social media posts. I do podcasts. I do interviews with people. If you're local in person, we can do it via Zoom, co-host seminars, lunch and learns, whatever it is. We're here to help you add more value and hopefully boost up your social media.
Yep. And Sari, we give a little sneak peek. We are planning on doing between 6 and 7 minute credit videos. We should have those out to you guys in the next 3 to 4 weeks. These credit videos are designed for you to send your clients because people they're not likely to read things. We know if we send them a short, concise video that's going to give them some specific things to do, they potentially could do these things on their own, improve their score. Plus, it's going to give you a reason to reach out to your clients and send them valuable information to their database. So we're planning on shooting some videos, hopefully around 6 minutes. We're going to take a lot of the information today, chop it up for you guys, put it in a video, and then we'll be sending that to you in email in the next 30 days. So looking forward to it.
All right, so now into the good stuff. So my goal here today is hopefully you guys walk away learning at least one new thing about credit. So you can be a little bit more of a credit expert. So I know some of this stuff might be a repeat, but it never fails when I go out and teach a class that someone always says, I didn't know that, or that makes more sense. So hopefully that's my goal today, that you guys walk away with that. So I'm going to go over some common information and then some tips as well. So I always like to start with, because this is a common question we get, and as loan officers or real estate agents, you probably get it too, is why is Credit Karma or those credit scores I get online not matching with my lender? And a lot of us just go, oh, it's a different score. We don't really have a reason why and how to explain it. So I kind of wanted to break it down into layman terms so that you can sound, better educated and can give the correct information to your clients, or maybe just even understand better yourself. So in our credit world, we have two major brands of credit scores. And Jeff, if you can go to the next one there for me. So in the credit world, the big players are going to be FICO and Vantage. So everybody kind of has heard of FICO. Vantage is, being heard more and more. We're hearing it like Credit Karma and a lot of those credit monitoring services out there. And really, they both look at the same thing. You can see this pie chart here. Vantage has, 6 categories they look at, FICO 5, but pretty much same kind of information: history, utilization, type of credit, new credit. But the major difference in what can cause some fluctuations in the score is just the weight that they put on those different categories. But if you might notice here, both of them still, number one is your payment history is always going to be the number one indicator or driver of a credit score. So paying those bills on time matter, and getting negative ones deleted is going to make a huge difference in their credit score. And to break it down a little bit further, just a little history, I won't spend too much time on this, but FICO, developed long time ago, still used in about 90% of lending decisions, developed by the Fair Isaac Corporation, where Vantage is actually put together by TransUnion, Experian, and Equifax. They got together to make their own scoring model to compete with the FICO score. They both have a range around 300 to 850. They both provide fast and easy reading, scores to read, but I wanted to point out some of the other main differences. FICO gives you anywhere from a 30 to 45 day to window shop, where an inquiry only counts as one. Vantage is a 15-day. One new thing that I learned recently is what it takes to even generate a score with either FICO or Vantage. So FICO, you actually need 6 months of history to get a score. So you need to either have an account open for 6 months, or you need to have some recent activity on your cards if you already have credit in the last 6 months, and you can't be recognized as deceased. And that's how you get a FICO score. Vantage is a little bit more lax on that. You only need 1 month of history to get a score, and it actually can be a collection account. So that's why people, sometimes if you run a credit report and you're not seeing a FICO credit score, most likely is they haven't had a credit card open long enough, or they haven't used their credit cards in the last 6 months and their score disappeared. Another big thing is FICO treats all late payments the same, whether it's your car, your credit card, your mortgage. Vantage gives you a little bit more of a hit on your mortgage. And then another thing, Vantage likes to see more a mixing credit, where it's not as important in the FICO score. So just a couple key differences there besides the different categories. And then I also like to break it down even further. If two brands of credit scores wasn't confusing enough, is there are many, many, many different types of versions of the FICO score. So I like to tell people also, if you're getting a FICO score and it's most likely going to be a FICO score 8. If you're doing credit monitoring, your bank sending it to you, it's just a very generally widely used credit score. In the mortgage world, most likely you're looking at FICO score 5, 4, and 2. And then the bank cards have their own scores. The auto lending industry kind of has their own FICO scoring method. And really it just has to do with the level of risk. Obviously, lending out on a credit card is less risky than a car, and a car is a little bit less risky than a mortgage, causing a little slight variations between the different versions of FICO there. And then I don't know if you guys heard about, I think it was last year, they announced the approval of 2 new scoring models to be used in the mortgage world. And it was our FICO 10T and our Vantage 4.0. And it was supposed to start actually rolling out this year. There's been a lot of talk about it. They actually just announced, I think, Jeff, was it like a week or 2 ago, they put a pause on that. There's a lot of questions on exactly how this is going to affect someone's credit. It was supposed to create some more competition between the two scoring models. One thing I'd like to mention is both of them are going to start looking at trending data where they're going to put more emphasis on overall what you've done in the last 2 years, as opposed to just what is on your credit report today. So another reason to stay really up to date and good on your credit, because sometimes you can't just drop down that utilization overnight if they start using these 10T and 4.0 models here. As far as going back to the FICO score and our mortgage score, I just want to quickly touch on how a credit score is calculated. I mentioned earlier, the number one driver of a score is your payment history. So that's just paying your bills on time. So anytime you have a late payment, collection, charge off, bankruptcy, that is going to cause your score to tank immediately. And luckily, those are the things that we work on Blue Water Credit. So obviously, anytime we can get something deleted, it's going to definitely have a good impact on your client's credit score. The other areas are more things that, you know, a client will work on themselves. Utilization is the next largest category. That's really just your balance compared to your limits. FICO likes to see it between 0 and 10%. Next largest is age of accounts. So they like to see older accounts. So this is the reason why we tell you don't close those old accounts and be careful opening new ones, because every time you open a new one, it's going to offset that old one and drive your average age of your credit cards down. Mix of credit, they don't want to just see credit cards. They want to see a couple credit cards. They want to see an installment loan, like an auto or student loan, and we can show you a way around that if your client does not have one of those items, and then obviously a mortgage. And then last but not least, inquiries or new credit. So applying for new credit can affect your score anywhere from 1 to 5 points with a hard inquiry. If you are curious on how to learn what your mortgage credit score is without having a lender pull it, I know a lot of lenders out there nowadays have the ability to do a soft pull, but not everybody wants their credit pulled by a lender. They're a little bit skeptical, or maybe you just want to know. A great site to go to that we direct our clients to is myfico.com. It's really the only website where you can get all 3 mortgage FICO scores in one spot. Actually, you get a report that gives you all those different versions of the FICO score. So it can be a little bit intimidating, but just go and look for the mortgage 5, 4, and 2 score. You can either sign up for a monthly subscription with them, or you can do a one-time soft pull that does not affect your credit for around $59.95. And one new thing that was just announced this week, I had to change up this slide because I've been talking about it ending in 2023, but annualcreditreport.com, just like in the name, everybody's familiar with them because you used to get one credit report a year from each of the bureaus and it didn't cost you anything. Starting in COVID, they actually allowed you to pull 1 per week. So people can kind of stay on top of their credit, spot errors, more quickly. We were told this was going to end after this year. They just announced that they're going to continue this 1 time per week indefinitely. Again, it does not cost anything for the client. It does not hurt their credit. The great thing, it shows when a delinquency is scheduled to fall off. So if you're wondering when a account with a late payment or collection is scheduled to fall off the credit report, and we use this to gauge on disputing them, this is going to show you the month and year. The only downside to this credit report, no scores are given. So it is mainly for the data on the account that you're tracking, to just stay on top of your credit and make sure you're catching errors right away before it gets out of hand. Opt-out pre-screen. Hopefully a lot of you guys are familiar with this. This is something we recommend for all of our clients. Under the Fair Credit Reporting Act, the consumer credit reporting companies are allowed to sell your clients' information. So that's why whenever you have a hard pull for your clients, they all of a sudden get inundated with calls. I had a story once, a lady had her credit pulled and she had 99 calls in one day, and probably only 5 of those lenders could actually do the type of loan that she was looking for. So not only is it frustrating for your clients, but it can be confusing for like a new time home buyer. They don't know who they're talking to. Next thing you know, you lose your client to somebody else who called them and tricked them into thinking that they were the one who pulled their credit. So it's a really simple process. You go to this website, optoutprescreen.com, takes a couple minutes, plug in a couple key information, name, address, social, date of birth, and it only takes up to 5 days. I did a presentation the other day and someone was thinking it took 30 days, so they weren't even telling their clients to do it. 5 days is typically the max that it'll take. It's good for 5 years and you can always opt back in. So I would say when you start working with a client to, encourage them to do this right away and do it for yourself as well. And I'll have Jer kind of touch on these medical collection updates since he's the one who deals with these derogatory items on the credit report.
Yeah, I would say right off the bat, if you have a client experiencing any sort of medical collections on the report, we tend to have a pretty high success rate in getting those deleted without them being paid. So I would say shoot those over right away, so that way we can try to save some money and improve scores there. But on the screen here, there's 3 important things about medical collections. Number 1 is if they're paid, they can actually no longer report to credit. And then if the balance does not exceed $500, those can no longer report to credit as well. And then upon a medical collection going delinquent, it'll take 12 months before it can report on that person's credit. And there wasn't a particular date that the credit bureaus gave on these rules here, but it was effective early to mid 2023, so this year.
Thank you, Jer. And now just touching on inquiries. I've talked a little bit about soft pulls, hard pulls, and so hopefully most of you guys know what this is, but I always get some people that didn't realize something falls under a certain category. So I'm going to just touch on it real quick. So soft inquiry, anytime you pull your own credit, no effect on your score. Background checks, this is typically employment related. This is not going to have any effect on somebody's score, or it's pulled by a business that you already have credit with. Maybe they're just looking to offer you a credit line increase, or just check on your credit history. That is not going to have an effect on your score. Promotional, this is where that opt-out pre-screen comes in. So when these creditors make offers of credit, they are pulling and looking at your client's credit. And so these, as annoying they are, at least they do not have an effect on your credit. These are often the things that you get junk mail or in the email. But if you want to bypass that, definitely do the opt-out pre-screen. And the third is the one that we're most concerned with. Those are your hard inquiries, which can affect a score anywhere from about 1 to 5 points. But we know that that sometimes makes a huge difference in a loan and what you get qualified for. So just to clarify a couple things, anytime you apply for credit is going to be a hard inquiry. That can be a home, car, credit card, any type of loan. But the nice thing is there is for mortgage a 30-day shot for home, car, or apartment. So in the mortgage FICO version, they allow for 30 days for someone to have their credit pulled multiple times for the same type of credit that they're looking for. And it will only count against them one time as a single inquiry. They'll all show up on their credit report, but as far as scoring goes, it only counts against them once. Sometimes you can run into it with a credit line increase. So we always just tell our consumers to ask their creditor if they're going to be doing a hard pull on their credit. And why is inquiries so important? Well, we know out there that people with 6 or more inquiries are 8 times more likely to file bankruptcy. So it's just a level of risk. If someone's out there, shopping around for lots of credit cards, doing balance transfers, looking for loans, it's a little bit of a risky behavior. And even though you may see 24 months of inquiries on somebody's credit report, it's only the last 12 months that is impacting their score. One of the questions, and I love talking about this because this is what I do, is when do we recommend to have your clients settle a debt, and is it actually really helping their score? So first and foremost, during a consultation, we are going to ask your client if any accounts are required to be settled, because we know that underwriting sometimes will require things that maybe we might not necessarily recommend, or vice versa. So if you guys send over a client that has collections, let us know if you definitely need something taken care of, or if it can be left alone. But these are kind of the guidelines we go by when we're looking at somebody's credit report. As far as collection accounts, if the last payment has been within the last 4 years, and this really goes for California, we usually recommend settling it just because it's within that statute of limitations. I've seen so many people go with credit repair companies that say, we just dispute everything, don't settle anything. they sometimes can get it off your credit, but next thing you know, they're getting sued and they're still having a lawsuit, a judgment against them. So even though it is not on your credit report anymore, it is still technically a debt that you can have legal action against you. We typically recommend always settling utility, phone, or cable company accounts. These are notorious for moving around from collection agency to collection agency. So just because you see something magically appear on their off on their own, it's usually because like AT&T has pulled it from MRS, pulled it back in-house, and then sent it out to another collection agency. So the last thing we want is that collection to pop back up with somebody else right when you're closing a loan. So that's why we will always recommend utility and phone accounts. And we have a high success of deletion through a dispute process when collections are paid. So Jur can attest to that. Charge-off cards are another one that we highly recommend settling. It has a huge impact on their score, their payment history, the credit utilization. Sometimes there can be even double reporting. I see this a lot with Travis Credit Union. If a creditor has not sold the debt and they outsource it to a third party, both are legally able to report on the credit report. Both of them can report the balance. So you're going to get hit not only with the balance from that original creditor, you're going to get hit with the balance with that third party collections. If the account was sold, that's a different story, but you can always run into double reporting, which means double the hurt on your score. Often the accounts, I can go in and negotiate a deletion, and usually this either means a pay for delete where you pay the balance and they agree to a full deletion like the account was never there, or in some cases they will settle for less than what they owe and also secure a deletion. And this is where my expertise comes into play here. I have a really good understanding who will settle for what and who will give me a deletion, who will give me a deletion letter. If you guys are able to use deletion letters to do rapid rescores. One thing out there, original creditors, for me, they do not negotiate a deletion for a settlement, but that's where our attorneys have been key in filling that gap for us there and getting original creditor accounts deleted and the debt waived. And just remember, deletions, I can't negotiate those after they've been paid. We can obviously try to dispute them. That process can take a lot longer. So it's always in your best interest to make sure you talk to an expert before you pay something off, because I can't go back and undo that. And you take the power that I have as far as the payment out of my hand to negotiate that deletion. You may be tricked into paying for things that you don't need to pay or overpay on a settlement, like an old debt that's not even on a credit report anymore. And I always make sure I get the right documentation. We have had it happen too many times where an account gets settled. It unfortunately gets moved somewhere else, but luckily we have the documentation to show it's been settled and it's something that can be fixed relatively quick. So going in to the home stretch here, I'm going to go over some big credit score mistakes to make sure you guys are aware of. As I mentioned before, paying late or having a new collection has a huge impact on your score. One derogatory account can lower a score by 100 points, which, is common knowledge here. But what a lot of people don't realize is some of the main things that can cause you to go late or go into collections. And it's something as simple as just not checking your auto pay or your annual fees that are charged on your card. So many times I have had clients set up the auto pay for a set dollar amount, then they charge additional charges on their credit card. Now, all of a sudden that amount of $100 no longer covers that minimum payment. They see the amount coming out of their bank account each month. So they're like, hey, I'm paying Chase every month, but they're not checking their statements to see if that's actually covering the minimum amount due. Next thing you know, they're getting hit with a 30, 60, 90-day late, even a charge off for something as simple as $5 missing off of a minimum payment. Or those annual fees. I have cards that I don't use anymore, but I don't close them because I know how important it is, but they are still charging annual fees once a year. So if you're not opening your statements and catching those annual fees or having your card I keep them automatically set up on auto pay for minimum amount due, those can be then go into 30-day late and then cause all sorts of havoc. But those are luckily items that we can take a look at and hopefully fix and looked at through our free consultation. Maxed out credit cards. I talked about credit utilization being the second largest component of a score. It can drag your score down by 40 points, just one maxed out card. So we always recommend paying the balance under 10%. Another hack, if you don't have the funds, is to request a credit line increase to lower that utilization. Yes, you may get hit with an inquiry, but at the most, like I said, that might be 1 to 5 points, but the benefits you get from that, doubling of your credit line and your utilization dropping is very impactful compared to the hit you take on the inquiry. And one little trick too, people don't realize, especially those that pay off their credit cards each month and wonder why their utilization is so high. Your statement balance is typically the balance reported on your credit report. So if you're like the normal American and you pay your credit card bill after you get the statement, you're really not doing yourself any good in the utilization department. The key is, if you're trying to at least trick the system, is you need to pay that balance before the statement comes out, or make multiple payments throughout the month. So when the statement does come out, the balance is a lot lower than what it normally would be if you weren't making the multiple payments. So little inside tip there. We know applying for new credit can impact your score with the inquiries, but like I said, it also can impact your average length of credit. So you're getting hit in 2 major categories there for your credit score. So we always recommend holding off until after a home loan closes to apply for any new credit. And then last, do not close those old accounts, and make sure you're using them every 3 to 6 months so that the creditor is not closing them due to inactivity that you have no control over. Now for how to get your score up quick in the next 30 days. So we talked again about utilization, doing the credit line increase or paying it down. So I recommend, if you're limited on funds, can't get that credit line increase, using the snowball method, where you start with that lowest balance account first, pay that down to the 10% range, and then work your way up balance wise. Another option to help increase the score is getting added as an authorized user. This can help you in a multitude of ways. Whether or not you lack credit history, you are essentially inheriting someone's credit history of that particular account that you got added as an authorized user. So if they've had that card for 20 years, they've been impeccable with their payments, and the utilization is low, you get the benefit of that 20 years of history onto your credit report or your client's credit report. It can also help offset utilization if their utilization is low and the rest of your cards are maxed out. So there's a lot of benefits with authorized user, but in the same aspect, if that card is then paid late or maxed out, it will hurt your score. And then at that time, we recommend getting removed from the that card. Not everybody has somebody that will add them as an authorized user. If that's the case, then we have options for secured credit cards and a credit builder loan. I know Jer will put in some links for these products that we have, but the secured credit card has like a 99% approval rating and can report to your credit report as quickly as 7 to 10 days. You can just do something as small as a $200 opening balance. I mentioned earlier, if your client is missing out on having a car loan or a student loan and they're needing a mix of credit, we have an amazing product, a credit builder loan. And it's essentially a savings account you pay into. I think it's a minimum of $15 a month, and it shows up on your credit report as an installment loan. So not only are you saving money, but you're adding to your mix of credit on your credit report. And last but not least, you can always schedule a risk-free consultation with one of our credit advisors. They will give you personalized information that is specific to what they see is going on with your credit report. Again, it's risk-free at no cost to you to get that initial consultation. And Jeff, I'll let you take over from here.
Yeah, for sure. Yeah, thank you guys for hanging in there. We're going to wrap it up. So best clients for our services, you guys, if they're trying to buy a house and their credit scores are lower, and they have a little bit of time, 45 days isn't ideal. If they have 60, 90, 120 days, that's a good referral for us. So at least send the credit report over to Jer or to Kara. Have us take a look at it. It might be some simple things that we can coach them on what to do to improve their score. Or it might be something that we could do to help resolve it in 45 to 90 days. Either way, their score is going to go up. You're going to be able to get them a lower rate. They're going to be happy with the situation. So obviously, if there's collections, that's an ideal referral for us. If there's credit report mistakes, if they have had identity theft, if there's late payments, if they need debt negotiation, or if they're struggling with debt, right? I just read an article, we're at an all-time high now for credit card debt. So it's over $1 trillion. So if you guys have clients coming to you, they can't get a loan because of their credit card debt, we've got some solutions for them. Kara, do you mind getting back on and talking about the process for those loan officers and realtors that haven't worked with us before?
Yes, absolutely. And I know we've touched upon it, but I'll just so We offer free consultations, so you can certainly, and we will follow up with an email to you guys with the recording today. And then a simple email template works well. We'll include that with all of my contact information, and there'll be a place for you to put your client's contact information, and email both of us. And then I will have them scheduled for our free consultation. We also have a direct portal on our webpage if you'd like to submit their information that way. And if you have a credit report to send that you've already pulled, that's great. If not, we can help them with a soft pull, but we'll get them scheduled for a free consultation and then be sure to keep you in the loop. So we'll let you know the outcome of the consultation. And if they do sign up with us, you'll receive an email from one of our amazing case managers, either Jur or another one of our amazing case managers, with login information to our online portal where you can track their progress, follow along, and we'll be sure to give you updates along the way.
Awesome. Thanks, Kara. And for those of you that don't know, we do have a 100% satisfaction guarantee. So for whatever reason, we want your client to be 100% satisfied. We will do whatever it takes. You know, if your client had a bad experience for whatever reason, I'll meet with them personally. We'll issue a refund or whatever we need to do to make it right. For those of you looking for some resources, you can go to our website, which is bluewatercredit.com. We've got a blog on there. Feel free to use the articles on the blog. We've got over 400 blog articles written. You guys can use it for social posts. You can do email blasts. We also have a credit building tool we just added to our website last week. Jur, I believe you put the link in the chat, but you can go to our website under services. You'll click that, and down at the bottom, it'll say credit building tools. So the secured credit card that Sarah mentioned. We also have the credit builder loan. We've got credit monitoring. And then for those struggling with debt, we have a debt calculator. They can put in all their debts, the interest rates, their payments, and if they have extra funds, it'll tell them which cards or which accounts to pay down first and by how much. So that's all free resources on our website. We will be sending you guys next week an ebook you can co-brand. Like I said earlier, you will get a copy of this recording. We will send you a copy of the presentation. You know, guys, we want to be a resource for you. You know, we're here to work alongside you. Like I said, the market's not easy, but we want to present solutions for challenges. These are some of the tools on our credit building page. Like I said, we have the credit builder card with it shows within 7 to 10 days. We also have the credit builder loan if they don't have a car loan or installment loan. If they have concerns about identity theft, we vetted Identity IQ. Typically, they charge $30 a month for their credit monitoring and identity theft. Because we've referred so many clients, I've been able to negotiate the payment down to $19.95. So for any clients that need identity theft protection, credit monitoring, we have a solution for them as well. So again, I just wanted to say thank you guys for hanging in there. If you have anybody that you'd like to review a credit report, feel free to email Kara at Blue Water Credit. Next week, like I said, we'll send you the email with the ebook, the credit building tools. And then if you found this valuable and you'd like us to share with your team, or maybe some of your referral partners, just reach out to myself or Kara, and we'll get scheduled to do a team meeting. We can do a talk from 15 up to 30 minutes. And just wanted to say thank you guys for the chance to help. What we do in the real estate industry is not easy. It's hard work, but when we serve others, I really believe it gives our life great purpose. So thank you guys for investing 40 minutes with us, and hopefully you found some value. If you have any questions, reach out to one of us. Otherwise, have a wonderful day and go Niners. We'll see you soon.
Thank you.